Bastian, congratulations on the funding.
Thank you.
But we were talking about this round for a long time. How difficult was it? Did you bleed a little bit to raise this money?
I wouldn't say we bled, but I think the funding environment definitely cooled down. And on top of that, we're operating in a space that's a little bit underappreciated right now. I think the on-demand space in general had a little bit of a bearish outlook this year.
That 100 or that valuation was the same as your previous valuation. Usually a kind of sign of investor caution when the valuation doesn't go up. What should we take from that?
Well, I mean, we would have loved it to be a little higher, but I also believe that it is fair to look at last year, and you probably have a year where the prices were a little bit inflated. So the market corrects itself. I think 140 million is still one of the largest venture rounds raised this year. It is specifically in our space, it's one of the largest, so we're extremely proud of it.
Eric, let me put you on the hot seat here with Bastian sitting right here, but you've been in your coverage of this space a little skeptical about the not just the delivery startups, but in particular the food startups like Munchery and DoorDash. Did the Postmates funding round and the 600 million valuation, did that surprise you, or what does it say to you?
Yeah, I mean, it's a super competitive space, and certainly investor sentiment has turned against it somewhat. I mean, Postmates' close competitor DoorDash had raised a round with a share price that was lower than its previous round.
So that was a down round.
Right. So we'd seen already sort of signs of trouble in the space, but still, I mean, there's still a lot of investment going in. I mean, Deliveroo just raised a bunch of money, and then of course
they're in the UK.
Yeah, and then Uber Eats, Uber's food delivery services. We don't have exact numbers on how much they're investing, but they're investing very heavily in that and growing that all over the world. I saw some of them in Mexico City when I was there recently. So food spaces, there's still a lot of investment being made, but we definitely seen an increase in sort of skepticism about the space.
And Bastian, not to go too deeply into inside baseball, but I've read a little bit about how you had to structure the round or anything that you had to offer investors to get to that $600 million valuation. Is there anything that you could tell us about getting to the finish line?
I read a lot about it too. So I think when we look at the term sheet and when we looked at the offer that we had from Founders Fund, we believe it's a very fair deal. And as far as I can tell, there is nothing unusual in the structure of this round.
Now, Eric, jump in here, but in Eric's piece, you talk about Uber, one of your main competitors, and you say they do a kind of a Death Star thing, right? That they weaponize their balance sheet to kind of get into the space with their delivery product, Uber Eats. What did you mean by that? How are they using their capital advantage?
I think they brought something to the Valley that we have not seen before, and that is that, you would fight the war with excellent products and with innovation. But I think it has been unusual that you would use your balance sheet as your primary.
Isn't that a time-honored Amazon tactic or a retail tactic?
Yeah, but I think in the blunt way that it's been done is probably unique.
I thought one of the most interesting things you said in my conversation with you is just the idea that some of the sort of medium-sized, smaller players, at least compared to an Uber and Amazon, you could imagine teaming up. Like, I mean, what would that world look like? How would that happen?
I think when one says medium or smaller players, I think it's important to say that look at the total company size.
Yeah.
I think Postmates fought hard to be the largest on-demand delivery company in the United States,
yeah,
and we're extremely proud of that.
Right.
So there's a little bit the sentiment that we're just here because an Amazon or an Uber has not thrown everything at us that they have.
Yeah.
That's baloney, right? We're here because we deserve to be here because we've grown extremely fast.
Right.
But if you want to think beyond the next couple of years, if you want to create a truly large company, you have two ways to do that. One way is to go ahead and compete with Amazon and Uber, and you can try that as a startup. And there are ways to success. But another alternative is that you can find ways to success in creating a large company by teaming up with other players in that space, international players or other players on a national scale.
Well, you talk about Uber using its balance sheet. Amazon, with its new service, Amazon Restaurants, which is a part of Prime now, basically makes delivery free for Prime members. I mean, and they've got to be losing a ton of money on that. So as Amazon now starts to focus on the restaurant space, what does that mean for Postmates?
So we have not seen the efforts from an Amazon, and as far as I'm concerned, we also have not seen or felt any efforts from Uber in that space. But despite all this, I think Uber and Amazon are interested in the space because it is very lucrative. And this brings us a little bit back to a situation that often perplexes me when people believe that it's impossible to make any money in that space. It's clearly a space that is very interesting to a lot of players, and we hold a large share in that market. We have a product that is virtually free. If you sign up for our subscription service, you pay $9.99 a month. You get unlimited free deliveries over $25. It's a very attractive product. Our customers love it. So we were very well prepared for the competition ahead, and especially given the fact that we co-created this space. If you think back in 2011, Postmates was one of the first companies that brought on-demand delivery to the mindset of customers. You can be sure that we're not just stepping aside because competition heats up a little bit.
I mean, one of the things that I think most people think about when they think about Postmates is you can get anything. Like, it's any type of food you want, and maybe someday sort of anything you want, period. But at the same time, I think to make the business model work, you've acknowledged that you've got to, or at least you have to have some restaurants that are cheaper, and then the everything set of restaurants is going to be much more expensive. Or am I getting that right? Or how do you think about those two categories?
The truth is that we're executing against the same plan that we did from when we started the company. We wrote it down in all details, and we actually openly talked about it. We launched a premium product first, a premium product that allows the people that can afford it to get access to goods that they want in a short period of time. That product financed other products. The latest iteration of that is our Plus product, which integrates merchants, where we receive a kickback from these merchants, and on top of that we have a subscription service. So it's not like Tesla, but it is a lot like Tesla's plan to start in a premium segment and then to bring the price down significantly, and we have done that.
We have about 10 seconds left. Your first international market, is it going to be London, or are you starting to rethink that?
We're still thinking about it.
You don't want to make some news here?
I tried it before, and I don't want to be off with the prediction yet.
Okay.